Imagine Sarah, who meticulously saved every penny from her day job, feeling like her financial progress was moving at a glacial pace. After years of disciplined saving and investing, her account balance finally hit $100,000, a number that seemed almost mythical at one point. Suddenly, it was as if she had unlocked a new level in a video game. Her investments started to grow at a faster rate, and opportunities she had never imagined were now knocking on her door. This pivotal moment in Sarah's financial journey exemplifies a crucial concept in personal finance: net worth. Net worth isn't just a status symbol, it's a marker of financial stability and a gateway to even greater wealth accumulation. In this video, we'll dive into why crossing that $100,000 threshold often triggers an explosive growth in net worth, exploring the psychological shifts, strategic advantages, and economic factors that come into play. Let's uncover the secrets behind why net worth explodes after reaching this significant milestone. Number 1. The psychological shift. Reaching a net worth of $100,000 is not just a financial milestone. It represents a profound psychological shift that can dramatically alter an individual's approach to money management and investment. This transformation is rooted in the transition from a survival mindset, where the focus is on making ends meet, to a growth mindset, where the possibilities for building wealth seem boundless. When individuals like Sarah surpass the $100,000 mark, they often experience a significant boost in confidence. This is not merely anecdotal. According to Dr. Elizabeth Dunn, a psychologist specializing in money and happiness, crossing a high financial threshold can significantly alter your self-perception, turning what seemed like risky financial decisions into opportunities confidently seized. This newfound confidence encourages more aggressive investment strategies and a willingness to diversify into ventures that were previously considered too risky. This psychological metamorphosis also involves shifting from a defensive financial posture, characterized by excessive caution and fear of loss, to a more offensive one that is dynamic and opportunistic. A study by the National Bureau of Economic Research indicates that reaching higher levels of wealth is correlated with greater financial risk-taking, which is often moderated by an enhanced sense of financial security and future stability. Moreover, surpassing $100,000 can trigger what behavioral economists call the wealth effect, a phenomenon where individuals feel richer and are therefore more likely to spend and invest money. The wealth effect reinforces the growth mindset by enabling individuals to think long-term and make decisions that compound their wealth, such as investing in stocks or starting a business. The psychological shift is not just about feeling wealthier or more secure. It's about a fundamental change in how individuals view their financial journey. They begin to see themselves as not just savers, but as investors and wealth creators. This is crucial because, as financial advisor and author Ramit Sethi notes, the biggest risk isn't failing to achieve your financial goals, it's never believing you could in the first place. By reaching $100,000, individuals often overcome this mental barrier. They start to engage with their finances not just to survive, but to thrive. This mindset is critical for taking the calculated risks necessary for substantial wealth accumulation, setting the stage for net worth to not just grow but explode. Number 2. Strategic advantages. Crossing the $100,000 net worth threshold unlocks a realm of strategic financial advantages that catalyze wealth growth, largely through better investment opportunities, the powerful effect of compounding interest, and the strategic use of leverage. Better investment opportunities. Firstly, achieving a net worth of $100,000 often provides access to a broader array of investment opportunities. For instance, many private equity funds and high minimum investment accounts are typically out of reach for those with lesser amounts to invest. These opportunities can offer higher returns compared to standard market options available to the general public. With $100,000, investors can diversify into more robust and lucrative markets, such as commercial real estate and niche funds, which are known for yielding higher returns under a well-structured risk management framework. Compounding interest. Secondly, the principle of compounding interest becomes a game changer as the initial capital increases. Compounding, often referred to as the eighth wonder of the world by Albert Einstein, is the process where the accumulation of interest earns further interest. This is best understood through the rule of 72, an easy mathematical formula to estimate the number of years required to double the invested money at a given annual rate of return. For example, at a 7% interest rate, it would take approximately 10 years to double an investment of $100,000 to $200,000 without additional contributions. Using simple animations, we can illustrate this by showing a snowball growing exponentially as it rolls down a hill, representing how initial investments grow over time. The larger the initial amount, like $100,000, the bigger the snowball becomes as it rolls, dramatically increasing the final amount compared to starting with a smaller initial investment. Leveraging. Thirdly, leveraging, or using borrowed money to increase the potential return of an investment, becomes more accessible and strategically viable at this level of net worth. For example, real estate investors often use leverage to purchase properties that would be beyond their reach if only using their own funds. By putting down $100,000 on a $500,000 property, an investor controls a large asset with a fraction of the total cost. If the property appreciates in value, the return is calculated on the total $500,000, not just the initial $100,000, magnifying the potential gains. Moreover, with a solid financial foundation, investors at the $100,000 mark can negotiate better borrowing terms, lower interest rates, better loan conditions, which further enhance their investment capacity and reduce risk. Reaching a net worth of $100,000 marks the entry into a more strategic playing field in personal finance. The combination of access to high-caliber investment opportunities, the potent force of compounding interest, and the prudent use of leveraging can significantly amplify wealth growth. These elements, when strategically employed, not only accelerate the expansion of net worth, but also secure a more prosperous financial future. Number 3. Economic factors. Reaching a net worth of $100,000 not only shifts personal finance strategies, but also brings significant economic advantages that can further accelerate wealth growth. These advantages include more effective market participation, access to professional financial advice, and the ability to utilize advantageous tax strategies. Enhanced market participation. Individuals with a net worth of $100,000 or more are better positioned to participate in the markets during times of volatility. This robust financial footing allows them to adopt a long-term investment perspective, mitigating the need to sell off assets during market lows due to short-term liquidity needs. For instance, during market downturns, such as the one experienced in early 2020, those with greater financial buffers were able to hold onto or even buy more stocks at depressed prices, benefiting from the eventual market recovery. Access to professional financial advisors. With $100,000 in assets, individuals often find themselves eligible for personalized financial planning services from professional advisors. These advisors can offer tailored investment strategies that optimize returns and manage risks more effectively than generic investment plans. Financial advisors also provide guidance on portfolio diversification, ensuring investments are spread across different asset classes to minimize risk and capitalize on different economic conditions. Tax benefits. Substantial net worth also opens up avenues for tax optimization strategies that can significantly enhance wealth accumulation. Strategies such as tax loss harvesting, where investors sell securities at a loss to offset a capital gains tax liability, become more relevant and impactful. Additionally, higher net worth individuals can benefit from higher contribution limits in tax-advantaged accounts like IRAs and 401(k)s, allowing them to reduce their taxable income more significantly. Consider the case of Emily, who reached a net worth of $100,000 through diligent savings and basic stock investments. Upon reaching this milestone, she consulted a financial advisor who helped restructure her portfolio to include tax-efficient investments and guided her through opening a SEP IRA, maximizing her retirement contributions and reducing her taxable income. During the market dip in 2020, rather than selling in a panic, Emily, guided by professional advice, invested additional funds into high-value stocks, significantly benefiting from the market recovery. This example highlights how economic factors such as strategic market participation, professional financial guidance, and smart tax planning play pivotal roles in the rapid acceleration of net worth once an individual crosses the $100,000 threshold. These factors ensure not just growth but sustainable and strategic wealth accumulation, emphasizing the profound impact of reaching this financial landmark. Number 4. Social and network effects. Reaching a net worth of $100,000 often heralds not only financial stability but also opens doors to enhanced networking opportunities and the cultivation of social capital, both of which can play a significant role in further wealth accumulation. Networking opportunities. With an increased net worth, individuals often gain access to exclusive clubs, high-profile gatherings, and elite professional groups that were previously out of reach. These environments are fertile grounds for networking, where relationships with seasoned investors, business leaders, and professionals can lead to profitable ventures and insider investment tips. Networking in such circles often leads to partnerships and opportunities that are not advertised or available to the general public. Social capital. Social capital refers to the resources available through personal and professional networks, encompassing relationships that provide information, trust, and cooperation. For someone like Alex, a hypothetical entrepreneur who has recently achieved a $100,000 net worth, these networks can be instrumental. Alex attends a local entrepreneur meetup and connects with a venture capitalist looking for a minor yet strategic investment in a promising startup. Leveraging this connection, Alex secures not just investment, but also mentorship, significantly enhancing the growth potential of his business. Networking. Imagine Lisa, a real estate agent, who has just surpassed the $100,000 mark in her savings. Recognizing the importance of networking, she joins a real estate investment club where she meets Michael, an experienced investor looking for an agent to handle large transactions in upscale neighborhoods. Through this connection, Lisa not only earns substantial commissions, but also learns about property investment and management. By leveraging the insights and opportunities gained through her new network, Lisa diversifies her investments in real estate, which dramatically increases her net worth. These scenarios underscore how reaching a significant financial milestone can enhance an individual's ability to leverage social and professional networks. Networking effectively allows individuals to access a wealth of knowledge, resources, and opportunities, thereby significantly boosting their financial growth and net worth. Educate yourself, seek advice, and strategically manage your finances. Every step you take is a step closer to not just reaching, but surpassing the $100,000 mark and beyond. Subscribe for more insights and strategies to help you on your journey to financial success.